Ladies and gentlemen, please welcome to the stage economist Ihsan Buhulaga and his guests.
تفضل. Hi everyone. A very pleasant day with your presence. And yesterday was extremely exciting. At the beginning, I need to thank the organizers, PIF, great event, impressive crowd, and we got lots of great news yesterday, transaction-wise. And today we'll be talking also about transactions, more or less. This session is about private equity versus public markets. This topic is, even though that it's dear and near to the panelists, but still at the very beginning in our country, Saudi Arabia, when you look at the potential. So not to take too much time, I'm extremely glad to introduce the panel. Dr. Sahar, Her Excellency Dr. Sahar Nazar, Minister of Investment and International Cooperation in the Arab Republic of Egypt. Mr. Patrick Zhang, the founding managing partner, M31 Capital in China. Mr. Shiv Khemka, Vice Chairman, Sun Group, India. Last but certainly not least, Dr. Fred Hu, founding partner, Primavera Capital in China. And as I said, the topic is private equity. You see, when we're talking about investment, actually we're talking about more or less risk versus return. And we're talking about, when we're talking also about private equity versus public markets, we are talking about two alternative models, but not necessarily mutually exclusive. In the West, lots of institutional investors do take that route of private investment, private equity. It's part and parcel of their portfolios, and we are starting to see that here. So I can see in the audience some of the movers and shakers of private equity here in Saudi Arabia and our region. So my first question is, Dr. Sahar, your interest, I know, because of your portfolio, is more toward foreign direct investments, FDI. That's important to any developing country, in particular, say, Egypt. How would you relate that to your markets and the impact of FDI to, say, the markets in Egypt, public or even private transactions?
Okay, good morning, everybody. I'm glad to be with you on this panel. And indeed, one of the key objectives that we have, main pillars of the comprehensive economic reform program is to promote private sector participation, whether through equity financing or through overall attracting FDI. We are very much focused on attracting quality investment because at the end of the day, our ultimate objective is to promote inclusive and sustainable growth. We're very much for creating more jobs because that's one of the main challenges in Egypt. We want to enhance productivity, we want to be more export-oriented, and hence we are very keen on attracting quality investment that also takes the green quality investment that takes into account also environmental issues and social dimensions. Hence, the industries are a key priority. Technology is one of the areas that we're putting a lot of emphasis. The whole investment law that has been recently issued resonates around incentives that attracts these sectors that would invest in lagging regions where there is some disparities between one governorate versus the other. So these are potential. Of course, we, as discussed just before starting the panel, also recreations, tourism is also an important area. And I had my colleague, Minister of Tourism, was here, and that's one of the main sectors that we are also promoting. Real estate is also a priority. And obviously, we're tapping on the different instruments. Equity financing is one of the mechanisms we're proceeding with. There is a whole program of IPOs that we are currently finalizing with several key investment banks. But ultimately, we're after quality investment that would really promote sustainable growth, that would enhance overall growth, and that is based on the reform program, both the fiscal consolidation, monetary policy, but also improving the business environment overall.
Great, very impressive. Patrick, my question is direct. How do you make money in private equity?
Investing in the right companies. And I think being an investor in private equity, venture capital, or public equity, end of the day is your best protection from risk is investing in the best assets. This has been my lifelong philosophy. From over 20 years ago when I started in this business, and actually I was being a young Chinese guy living in America, I was concentrated on investing in best growth companies in America. And we developed a framework and to size up the quality of the company from many things such as business model and cash flow, competitive advantage. And all those elements sound simple, but this is a trade. You have to sort of refine your skill over many, many years. You need to have a deep respect of the cycle. You can be a good investor for maybe 2 or 3 years. You can show a pretty good number. But over 20 years, over 25 years, are you able to achieve that? And that's the philosophy of making money. Because when you're making money, you want to make money longer term. And again, I think investing in the best companies is a good starting point. And today, and with the same philosophy, and we're investing in China leaders enabled by technology. We're only invest in 12 to 15 of those names. Each of them, in our view, with our conviction, will become the category leaders in that area in China. But gradually, this is also my conviction and my belief. Starting from today, actually starting from probably a couple years ago, these companies started to embrace globalization. They will venture outside China. They will become a very influential players by bringing technology to many other countries. And we've seen some early successes in doing that.
Thank you. Shiv, you have a very peculiar experience. Between two geographies, Russia and India, right? So what's your take? Private equity in say, Russia now, as you heard yesterday, I don't know if you were here yesterday or not, but Russia, we are doing more business with Russians. So what's your take on the private equity in Russia swiftly, and then maybe we can move to another question. But just we want to know, to benefit from your knowledge and depth knowledge of Russia and investing in there.
So we come from a family business, over 100 years old as a family business. So we started investing in private equity and public markets in the last 30, 40 years. Private equity for us is really an extension of our business energy as a family business. Managing businesses, understanding how a business runs, understanding the sector. And so when I went to Russia 28 years ago, straight after Wharton Business School, my father sent me to Russia. I think he didn't want me to damage the family business in India. So he said, go north, young man. And I ended up in Moscow, and I realized it was a very unique time. And the only way to invest was private equity. The only way to invest, to do a business, was actually to invest in a market where you had to buy the company, understand the sector, put in management teams, run the business, turn it around, fix it. So we did a roll-up strategy in the beverage sector, and we built one of the largest beverage companies in the region. We were able to sell it. We got a 22% return over 12 years, compounded. on that for our family capital. And we did a number of other transactions in the chocolate sector, confectionery, oil and gas, petrochemicals, IT, food processing, gold mining, which is what we're doing now. So I think it's about, in many emerging markets, public markets aren't as open to a broader range of mid-market opportunities. And so when we went to Russia in the early 90s, there was very barely a public market. So we were forced into private equity. And it's been a very profitable asset class for us. And we believe if we look at our portfolio as a family over the last 30 years, our private equity portfolios have done better, whether managed by us or whether invested with other private equity managers compared to our public markets performance.
Very impressive. I know you cannot tell us all the secrets, but what's your recipe for selecting companies? So when you look at a company or a bunch of companies, say, okay, I'll take this sector, this particular company. Any guiding rules that will help you in selecting companies?
Well, for things that we manage, that we want to invest in directly or co-invest directly, we want to understand the business and understand it ourselves. So the simple rule is if we don't understand the business, we don't want to invest in it. We'd rather give our money to other private equity players, venture capitalists, who know what they're doing and can invest the capital in a much more thoughtful way than us. Obviously, apart from that, we're looking at risk mitigation, political risk. So in Russia in the early 90s, we decided to avoid sectors like oil and gas, mining, all the sectors that had a lot of political risk associated with them, went into the beverage sector, consumer-oriented sector, and did a roll-up strategy, consolidated the sector, built 20% of the market in our niche. And so I think it's really about building businesses that are easy to manage, have good cash flows, and will build some kind of a sustainable long-term brand and business strategy around them. That was our strategy in the early 90s in Russia.
And usually, what's the term? How long you keep the company?
So,
is it 10 years or less? I heard you said 12.
Yeah, I would say that because it's our own family capital, we try not to put a timing on it. We don't have the restriction of a private equity fund where you have to exit after a certain point, etc. So we tend to take an opportunistic view and look at the cycles and try to get the cycles right, try to exit when markets want our assets and not be forced to sell when the markets don't want our assets.
Interesting. Okay, Fred, tell us a little bit about private equity in China. You have massive experience, so we need to benefit also from that. Just shed light on the activity, investment activity in China, if you don't mind.
Sure, absolutely. So private equity has had a tremendous growth, expansion over the last decade or so. Today, China is probably the second largest private equity market in terms of funds raised or deal value closed. Okay, deals closed every year. We're second only to the United States. For example, 2017, the closed private equity investment reached more than 120 billion US dollars. That's a combination of traditional buyout, but most significantly, growth equity. Because there's a lot of dynamic, fast-growing companies in China, particularly in the consumer internet and related industries. So that has been a primary driver of the growth of private equity in China. So as we speak right now, it is really a dynamic, robust market, and there's a large stream of investment opportunities across the spectrum, but again, led by consumer internet, but also other industries such as healthcare, education, and so on and so forth.
Is there emphasis on particular sectors? Like, is it, say, the IT or leisure or recreation? Or?
Right. So China is a continental economy, a 12 trillion US dollar GDP. So it has a very large, diverse economy. So we have seen private equity investments go into all different sectors, including traditional manufacturing, but increasingly also consumer and services, retail, healthcare, education. But as I said earlier, there's no doubt the most dynamic, active industry attracting both early stage venture, but also later stage growth equity is technology, driven by consumer internet, including e-commerce, social media, and AI-related sectors.
If I could add a point, I think investing in the next 10 years is quite different from the last 20 and 30 years. The world has changed. I think our business will change accordingly. And for the last 20 years, if you identify one key trend, be it technology or secular, you understand where the money goes. In late 1990s was a consumer, it was the baby boomers driving a lot of successes of American brands. Then after that was the first wave of internet, and after that was clean tech. And during the financial crisis, and people look outside the developed markets, particularly with emerging markets looking for consumer upgrade. And most recently, people talk about mobile internet. But today, interestingly, when I sit there and looking into the future, I realize it's not one trend, but a multitude of technology trends shaping our future. And Fred was correctly pointing out, AI is one of them, but there's also IoT. There's our breakthroughs from life sciences. There's something called blockchain. By the way, blockchain isn't about currency. Blockchain is about decentralization, distribution of applications. So we're living in this fast-paced, very exciting new world. And by the way, and some of the companies are writing on the changes of maybe 3 technologies, and then they actually create a new business. One of the companies we have invested, it's actually a merged company between American company and the Chinese company. They do cancer research. They do the early stage cancer diagnosis. And this is where also Jeff Bezos, Bill Gates, Will kind of Jack Ma co-invested. And that business is riding on 3 things. Is the innovations with genomics, is the best AI team out of Google, and is also the cloud services provided by AWS. And my favorite question today with a lot of companies and entrepreneurs is, why didn't your company become into existence or becoming successful 5 years ago? Why today? So most of people actually sort of draw the answers from the technological developments we're seeing. And this is a world, if you're not technology savvy to start with, it's difficult to understand what's going to happen in the future. Many of the entrepreneurs today, they're looking at, from the breakthrough of technology perspective, how to apply these changes to traditional industries and create that sort of disruptive opportunity.
Right. So you have to have both. Actually, this is one of the biggest questions here in Saudi Arabia. You see, you have a traditional economy based on oil and gas, and then what you need to do, you need to diversify that. And when you're talking about diversification, it's at 2 levels. One, to move into traditional sectors that are depressed here, more or less, like recreation, leisure, et cetera, and at the same time, go after the digitization, the frontier of high technology, and maybe collaborative work because of our situation when it comes to the shortage of human capital, especially the semi-skilled and the skilled. This is very interesting. But I'll be asking you about something relevant. You see, we are in this country, it seems to me also that we are, most of us, I'm talking about like the general public, learning some of the jargon based on the transactions, the progression of transactions that PIF is involved in. For example, the Tesla and the delisting of Tesla, for example, or buying and the acquisition of Lucid, the electric. Later on, I'll be asking, but first I will ask Her Excellency about FDI, but later I'll come back to you and ask you about leveraging and delisting. And if you have an example in that or any perspective, it'll be immense if we benefit from that as well by sharing it. Dr. Sahar, are you satisfied with the level of FDI that you are getting in Egypt?
Okay, before I answer that question, I think it's important to build on what Jeff and Eric said regarding venture capital and equity financing, because in Egypt we realized also that access to finance and supporting especially young firms. We have a very young population and a large, almost 100 million, and we need to also create jobs and support the young people to start their own business. So we've established Egypt Venture that would provide basically equity financing for those especially that would not find it easy to get access to financing otherwise. And that I would like, since we're here in Riyadh, I think it's important to acknowledge that Egypt Venture we've done in partnership with the Saudi Development Fund, with also EFG Hermes, and also with the World Bank Group under IFC. And this is not just providing equity financing to young, innovative entrepreneurs, as you've mentioned. So we're trying to support these young people with great ideas, innovative ideas that will bring in know-how, new technology, new ideas, using technology and how to provide all the different services and go through the advanced one. And that also helped us do a partnership with several companies that are using technology for mass transportation, for example. And from there, we've also packaged it with a lot of technical support because, as the colleagues on the panel have mentioned, it's a bit risky. And hence, it requires support beyond just equity financing and how to provide also the technical assistance, legal advice, financial advice to make these entrepreneurs, young entrepreneurs, successful and become larger firms. Going back to your question on FDI, we just had an extensive discussion at Bali, the World Bank and IMF annual meetings where we were discussing what's happening in the global economy. I think it's important to reflect on that before I go on to FDI in Egypt, because you see a bit of a slowdown in FDI in emerging economies with the challenges that is happening globally. And hence, despite that the overall share has been declining, Egypt's share of FDI has been growing, and that is basically due to the comprehensive economic reform program that President Sisi has put forward. We as government have moved in implementation, and hence we put a much more conducive and more competitive legal and legislative framework to attract FDI. And we're very happy with the recent progress made. Which yesterday we had a very high-level delegation from the U.S. that is many investors, including some of whom CEOs I've met here today in the morning at this important conference, where they are injecting, because it's a large market, large consumer market. As I've mentioned, 100 million population, but also with the free trade agreements between Egypt and Africa, especially that in the context that President Sisi will be heading the African Union in January 2019. So there's a huge market. And we see increase in investment also from Saudi Arabia. We're very happy with that, especially in real estate construction. And this is, again, a partnership where we want to see our region booming. So we see that the future would even be more optimistic, looking at monitoring how things are evolving globally.
Right. Very quickly, I would like to know, do you target certain companies internationally? For example, if you think that you need to enhance growth in a certain activity, say in automation, would you go after a certain company and invite them into Egypt and provide them with whatever convinces them to come?
Indeed, you're absolutely right. We need targeting. What comes spontaneously is more the petroleum and gas sector, so that almost accounts for 50% of our FDI, especially with the recent explorations of gas. But as you've mentioned, we want to tap sectors that are more more of value added to the economy, more of job creator, more of productivity. So we are targeting, in fact, we are targeting the automotive business, because that's an area where we see Egypt has an edge because of the huge labor force, but also the skilled and well-trained labor force that are very productive. And I see it in several companies that are already manufacturing in Egypt. Also, consumer goods is one thing we're targeting. especially on agribusiness, because also of the soil and access to water. These are sectors where we're targeting. IT, technology, as the colleagues mentioned, that's a sector we are targeting also because it has huge potentials in Egypt.
So you are targeting lots of sectors.
Not the ones where we see we have a competitive advantage. We have the Suez Canal, so we also have, that's where we also have partnership with the Saudis. I think that's an area where we're targeting logistics too, because of the many ports that we have, whether on the Mediterranean or the Red Sea. So we're also repositioning Egypt as a logistic hub, but also as a hub for renewable energy. We have the largest solar plant in Africa, Bimban, and that is done, by the way, a lot of equity financing and a lot of 18 private sector company that came in. So we have an ambitious program, but we still have specific targets to achieve.
Right.
Thank you.
Thank you, Doctor. Fred, tell me about your, and the audience, of course, about your leveraged buyouts, if any.
Right. So in China, private equity, the dominant type of transaction actually is non-levered growth equity. So it's 100% cash equity. Having said that, now because of succession planning, we have the first generation of entrepreneurs who started business 20 years ago, 30 years ago, in the primary age. Now they reach retirement age, so they're ready to sit the control. In that type of situation, we do consider leveraging. Typically, what we have done is around 4x EBITDA, okay, debt EBITDA. So which is very moderate leveraging, not excess leveraging we saw in North America and Europe before the financial crisis in 2008, okay? So fundamentally, when we talk about leveraging, we're more thinking of underlying growth in revenue and net income. That, in my view, provides the best leverage of all in terms of value creation. So yes, we are open in selected cases to some financial leveraging, but mostly we are looking for underlying strong growth over medium long term, so as we can create value and achieve high IRR for our investments.
Makes sense. Chev, what's your experience in leveraging?
So, as a family business, our priorities are protect our capital for the long run and grow the capital for the next generation. And the family wisdom has always been no leverage. Don't take leverage because it's very dangerous to build a business. But having been to Wharton, and my brother went to Harvard and learned about ideal capital structures and all the rest of it, we took on some leverage in our businesses. And we learned our lesson in 2008 when everything crashed, that the family wisdom was wise. Don't take on too much leverage. So at the end of the day, we understand that optimal capital structures and leverage buyouts can create better returns for equity investors. At the same time, as a family business, our model has been very conservative and remains quite conservative to take on very minimal levels of debt or leverage and only at the project level, if at all, and to really build cash returns based on growth sectors, fundamental growth. And we're lucky that we come from a country like India or even in Russia, where there are sectors that have fundamental growth embedded deeply in them, which one can take advantage of for the medium and long run.
Patrick, what's your experience leveraging?
I agree with both gentlemen here. Fundamentally, you have to look for quality asset to start with and good projected cash flow into the future. During the financial crisis in 2008, 2009, and we actually invested in a company called Focus Media. It's the largest digital outdoor advertising company out of China. At its peak, the stock price was listed in America. It was about $75 per share. During the financial crisis, because a lot of their investors are sitting in America, somewhere else, not in China, and following this company. And with the fear, the stock actually collapsed to about $6 to $7 per share. And we came in with about 25% of it. And how did we do it? We didn't do it just because the price is low. We did it because we do very old-fashioned due diligence on the company. We actually send out the teams to different parts of China, and we actually watch the cycles, commercial cycles on each of the screen, and count how many commercials they carry throughout the day, and what are the guys placing commercials on their network. We realize this is actually, most of their advertisers are mainstream. I'm not talking about the Chinese, and they're also big consumer brands around the world. And we believe the business is true. And we did our math. We realized, I think the forward, the earnings is, the multiple is only, kind of a 5 times multiple. And it's very much a cash generative business. So we decided to buy up to 25%. And we also, when the stock rose to $28, we privatized it because we think there is a knowledgeable base of investors in Asia who actually understand the future of the company much better. So we generated, more than 10 times the return on this particular investment. It's not just because we levered up, it's because we believe that fundamentally the asset is being mispriced and the quality of asset is excellent. And the company itself is the leader in that particular space. It's almost like a monopoly in that space. And they're also leveraging a lot of technology in developing new products. So that's where the conviction comes from.
Very interesting. But also, you have, maybe that's of relevance to us here in Saudi Arabia. You have experience in investing in recreation sector and in the leisure and these activities, right? What's your take? I mean, is it different than, say, and of course it is different, but how different than investing, say, in traditional manufacturing or even in the high end of technology like digitization? If you care to comment.
I have invested virtually every company who has every type of business model who has made money in the past. And for me, I'm sector agnostic. I just care about cash flow, longer term cash flow, the ability for the company to generate cash flow. Some of the people looking at the technology companies today, they say they're not making money. Another company says, oh, I'm not making money, but Amazon doesn't make a lot of, look at their multiples so high. But I'm like them, and I don't make money, but I can still be listed. I think we need to make a very clear distinction there. There is one group of business that are tremendous. They're actually not making a lot of money because they're keeping out the competition from entering in their business. I'm talking about Amazon here. But there are also businesses that they're just technology, but they spend so much money acquiring customers. In the end, the business model doesn't work. So for every company, I don't look at which sector they belong to. I look at underlying cash flow potential for the business before investing. Even in the venture capital space, most people say, oh, the companies are not making money, how can you invest? You can do the projection. You can do a deep dive understanding. And when they grow to a certain level of volume, will they be able to leverage the marketing spend? Would they be able to leverage their R&D? So at some point, they will be make money. A lot of companies, they're not going to be make money. They're just telling you the story. That's not where I go.
Right. Thank you very much. Doctora. Egypt is a big, of course, country. And the economy is more or less traditional. Of course, you have shining stars in there. Any particular incentives that you provide to the Egyptian companies with the highest growth, say for the youth or for the entrepreneurs, to make sure that that growth will continue and maybe they will provide higher contribution to the GDP and to various sectors in Egypt?
As mentioned by my peer panelists here, obviously private sector and investors are for IRRs and also cash flow. So my role as a part of a member of the government is to make sure that the business environment is conducive and is welcoming and is competitive for them, to make sure that these investors and equity financing are and the investment banks are venture capital are interested in coming to Egypt. So that's one of my key mandates, how to promote investment and how to make Egypt attractive and open for business. So in that context, we made major reforms in laws that are governing the business environment, including a new investment law that provides a lot of assurances and guarantees to the investors in terms of the stability and the security of investing in Egypt, because that's an important element that the investors will look into. So we've also simultaneously packaged certain tax and non-tax incentives to make Egypt attractive, because at the end of the day, it's a very competitive world. So we have a tax incentive that reaches up to 50% tax exempt from the investment cost for 3 years period of time that is extendable for another 3 years, so it makes it up to 6 years. We've also protected investors against any foreclosure of assets, because that was a main concern. This law was drafted in extensive consultation with investors from the Arab world, but also investors from Asia, from Europe, and from the US, listening to their concerns, because we've also went through several challenges in Egypt in terms of economic and political. So we wanted to make sure that things are definitely attractive for FDI to come in. We also knew that easy exit is important. So a business environment is not just easy entry, but also easy exit. So we finally have a bankruptcy law for the first time that was stuck for decades back. And in terms of equity financing, we've revamped our capital markets law, our Sukuk law, the law governing equity financing, financial leasing, and all the different non-bank financial institutions, because Egypt is dominated by banking sectors. So we wanted to make sure the NBFIs are growing, because we know that these are critical for enhancing growth at an exponential manner. So our role is more on how to make sure they feel Egypt is attractive for doing business, is secure environment for them to do business. And going back to your questions, obviously because of the major challenge of a very young population, so we are very much dedicating a lot of effort to young entrepreneurs, to startups, to emerging companies, and hence we are going an extra mile and an extra hand to make sure that they have access to finance, because we've done a survey and we've seen that one main challenge is access to finance, access to utilities. Now with the huge infrastructure, because also to make IRRs and cash flow high, you need also a solid infrastructure in place, not just a conducive business environment. So this sector was lagging behind significantly. So we had to move forward with a huge infrastructure, highways, tunnels, airports, maritime, but also power station energy, which was also suffering from several deficiencies. So we've put forward like sort of a comprehensive integrated package to make sure I'm able to attract people like them to come and seriously consider investing in Egypt. So,
yeah, this is very interesting. But for example, here in Saudi Arabia, you see the model is being changed, and it seems to me we are maturing in attracting FDI, trying to first. One aspect of that is really matching. So you see, you have the best of your companies are growing, maybe they are lacking in certain aspects. So it makes lots of sense to find partners and to make sure that these partners will come in and invest and enhance growth in such companies.
And a lot of
or it could be areas. See, you could see, for example, that you need an edge in say, digitization and automation, even in workplaces generally, including, say, government, for example, say, okay, what we need to do, we need to move into, say, paperless in 10 years and not be able to do it on your own or without massive investments from the major IT companies, the likes of Microsoft, for example. So sometimes you need certain efforts and initiatives in order to like trigger whatever you need and shorten the trajectory of things to be achieved.
And that's definitely a very important strategy. And in Egypt, we have sectors that are targeted, and we've already seen the results of that. For example, let me give you one example on energy. Energy, we've done a great job. Going back to the legislative framework, we've made sure that the private sector is able to invest in energy. So we had to go into the pricing and the pricing index for that so that we are able to bring private investments in. We're moving into diversifying sources of energy, so we're going solar, we're going wind, that's the sector, nuclear, peaceful nuclear, so we're making sure that this sector is attractive, and we see that Egypt has a huge competitive edge on that front. We're also focusing on sectors that will require skilled labor and low-cost labor, and this is where Egypt has a competitive advantage. And this is where my main challenge is. The third sector is, as I mentioned, is more on maritime and logistics because of the very strategic location Egypt is. Egypt is linking Asia and Europe, so the strategic location, we're both on the Mediterranean and the Red Sea. So if I go to the Chinese One Belt, One Road initiative, you see that Egypt is one of the top 5 countries, the priority countries in this large initiative. So we look at the various free trade agreements with the US, with Europe, with Africa, COMESA. I don't want to list all, QIZ. These are all excellent venues for not just, that's something we're targeting, where there is demand, not just by Egypt, but the whole African continent and the Arab. Where, for example, I don't want to refer to a specific company, but for example, Mars, they are exporting 80% of the chocolate that they're manufacturing to Egypt to the Arab world. So some of the chocolates we have here is actually manufacturing Egypt because we see that Egypt has a very competitive edge. The cost of doing business in Egypt is quite low. Yesterday, I just met the CEO of PepsiCo on my way in here. They've just injected yesterday $550 million new investments in Egypt because they're also seeing Egypt as a hub for consumer goods. So we are targeting specific sector. We're moving surely but smoothly. We're of course, and the bulk is gas because of the recent explorations that we've been generously endowed.
Great work.
And you mentioned partnership, and one of our key partners is actually Saudi Arabia. So we have several projects where Egypt is partnering with Saudi Arabia on rest and recreation, but a lot of real estate and construction. And we are also very proud of this partnership with the Arab world.
That's great, thank you. Fred, tell me if you look at any opportunities in our region, private equity,
Well,
or Primavera is limited to China?
no, we are China-based but a global investment firm, so we would go where the opportunities exist. I just want to make a quick comment about this theme of our panel, why it's public market versus private equity. I think you're absolutely right. You know, these two, private equity and the public market, are not mutually exclusive. They are highly complementary. You know, I was former chairman of Goldman Sachs in China, so I did many IPOs. And now I'm a member of the Hong Kong Stock Exchange board. I'm very proud Hong Kong is now the top venue for IPO equity financing. Actually, we're bigger than New York and London. So in that case,
So you can list big, very, very big companies.
I would be delighted to welcome Saudi Aramco to come to Hong Kong because China, Asia is also India. We are the largest energy consumer and rising middle class urbanization. I think it would make sense for America to consider listing in Hong Kong because we also have a very deep, liquid public market.
Right. Yeah, very impressive. Tell me, Shev, are you looking at deals within this region? Taking in mind that the number of deals in our region, and in particular in Saudi Arabia, is very limited. In the first half of this year, we concluded only 3 private equity.
Yeah, so as a family, we are looking globally as investors. We're very excited about India, to be honest, because by 2050, we think the Indian economy will grow 11 times, the Chinese economy will grow about 4 to 5 times, and the US economy will grow about 2 times. So just looking at the world, we feel India is a great place to invest. Second is we look at themes, and we're looking at a few themes. The first is urbanization. 700 million people in India will move from villages and rural areas to cities, and 100 new smart cities are being built in India. 3 to 5 million people per city. And when we see the project NEOM here that is being developed, we think there's a real opportunity to connect NEOM to the 100 new cities that are being planned in India, and to actually connect the dots and learn together and build the new modern type of city that uses clean technologies, better systems for waste management, digitization, smart technologies, better transportation systems, and so on. So we are in discussions with the people that are here at NEOM to see how we can connect this energy together. We very much believe in the digitization space, and we look globally at investments in that area, in technology, AI, and so on. And we tend to do that through venture funds and other partners that we trust and work with. And finally, being very conservative, we believe that everything is not only about the future. It's also about protecting downside. And so as a family, we've invested heavily in gold mining, as an example. We believe that's a safe haven when things crash. And we have a gold mine in Russia. We have some other gold investments. We're talking in Saudi about some gold opportunities and gold mining related opportunities, and looking at working with other families in the region and other funds to create significant investment in the gold sector, because India and China, I've been to China 100 times in the last 10 years. We're partners with China National Gold, which is one of the world's largest gold companies. We're working with them in Russia, and we're working with them and talking about global investments with them, and bringing funds together to actually create a safe haven of investment and retail investment. So India, for example, huge demand for gold, retail gold, not just a safe haven through central bank investment, but retail gold demand is going to explode as India's GDP goes from 2.6 trillion to 30 trillion by 2050. And so we think that's a very interesting opportunity to again work with our Chinese partners who are many years ahead of us in these sectors.
Yeah, I thought your triangle would not be complete without China, and you mentioned China. Good for you.
No,
Okay.
I think the interesting thing, I also always look at India and China, because I think what is most important is not just growing or even equity or public market, is the sustainability in growth and their ability to mitigate the risks and even the hiccups that the economy has. So these are like 2 markets that one has to watch, because over the past many years, despite all the crises, global or regional, they managed to maintain that growth. So we watch what are the main sources there.
Yeah, thank you. Patrick, you have the last word here. So tell us about how do you vision, and if you are targeting Saudi Arabia or the region nearby?
Well, let me speak with this line. I created this platform. It's called M31. People sounds like a pretty cute name, but actually it stands for something pretty deep. I believe in order to observe the major opportunities presented to us, you cannot stand on the peak of the mountain like traditionally we would. You have to remove yourself, stand somewhere in the universe, and looking from outside into the planet Earth to understand all these major trends, all these major opportunities, they converge in a very large way. In this part of exercise, investing is certainly a big instrument allowing you to participate. And nobody should be left out. Every major region is a part of this. So that's why I've been consistently active and making friends here in the Middle East. And collectively, we needed to look at all these major opportunities with a global view. I applaud actually for the theme of the conference. Future is coming, future is tomorrow. And we need to collectively and leverage all of our wisdom to tackle this complex problem.
Very well said. Thank you very much. With that, I would like to thank our great panelists, Her Excellency Dr. Sahar, Patrick, Chef Fred, thank you very much. And please join me in thanking them. Thank you very much.